This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. Today's a small losing day. Doesn't mean shit. Why? Why does it not mean shit? Well, because I have a process that I repeat and I know that it delivers over time. And when I have a red day, it doesn't matter because I come to the market the same or the following day and I do the same thing and I can get an entirely different outcome. That's confidence. That's confidence in yourself and your ability to execute your system properly. And once you found that system, you've got it. So, 2 losing trades doesn't really mean shit, but I am not me right now at all. Like, I am not operating at my level, at what I know I can, because of, recent event. I'm sure most of you guys watching this have seen my most recent video. Just got out of a 6-year relationship. She left me after 6 years, and I'm pretty devastated. And I'm definitely not me right now. By that, I mean I'm not doing what I'm usually doing. Whenever something happens that causes a lot of pain emotionally, I don't handle it too well. What I do is I fall into this cycle of distracting my mind and taking my mind off of thinking about what is going on that's causing that emotional pain. For example, I had a dog last April, my childhood dog, right? Literally spent every minute of my waking hours with this dog. He actually even slept with me too, and he passed away. And that change hurt. It hurts a lot. And I couldn't work for an entire week. I literally could not work for an entire week. So I sat in my bed watching YouTube videos, literally. So I did nothing for an entire week, and I'm kind of falling back into that same negative cycle after something serious happens. So I'm finding myself sitting on my phone, scrolling through YouTube, and I finally fell into a cycle of scrolling through YouTube Shorts. And I sat there and I scrolled through YouTube Shorts for about half an hour. And that's something that I never do. Ever. You will never catch me doing that. And I'm falling back into that simply because of what's going on. Trying to remove myself from facing the emotional pain. So today that didn't impact how I traded intraday. I wasn't really thinking about it while I was trading, but doing the post-market review, it definitely did. I'm just slowed down right now. I'm hitting a wall and I'm just having to accept the change. Like, did this really happen? It happened. It's crazy. I mean, I shared everything with this girl. She's literally a part of me, like a part of my soul. And it's just gone. So let's get into it. Today is Tuesday, October 7th, 2025. Net P&L 127.44. Like I said, nothing much. The optimal market approach. So, as you guys know, we had a fairly large down move, right? So we're having these moves where we're making a new all-time high and then boom, large down move. New all-time high, boom, large down move. And it's kind of hard to catch these large down moves if you're not expecting them, kind of like what happened over here where we had this large up move, new all-time high, consolidation, and then boom, it went. So we're kind of seeing that again today. Now, I was pretty confident in the idea of higher prices for multiple reasons, but there wasn't any actual reason for the market to want to trade higher after it delivered previous daily high. The only reasons that I framed for it to trade higher was based on the fact that we're at all-time high and we've been going higher, and what the market did in the overnight session. Because if we look at what the market did right from the Asia session at 6:30, we dropped down, London low. Now, I'm noting the formation of relative equal lows, but I like how this candle went below this candle's low, and this candle went below that candle's low. So now we have a double purge on sell side liquidity, and that was followed by a really, really strong impulse swing back inside the range in the heart of the London session. And there's a strong SMT divergence between ES and NQ, right? You can see that ES took that Asia low. So I was thinking that it probably did enough work down there If I look at the annotations on the 15-minute, double purge on sell side produces a strong impulse swing back inside the range with strong order flow. May potentially return back to this gap. I like how we've already dropped down in Asia, building the low a day. So I was extremely confident that the low a day was in the Asia and London session based on what we did. Based on how we dropped down, I thought we built the wick of today's discount of this daily range. I thought we had already built the discount wick on this daily range, but that wasn't the case. We ran up to PDH, and then boom, we flushed. Now, think about all the reasons for the market to want to go lower, and then compare that to all the reasons for it to go higher. What reasons do we have for the market to go higher today? We're at all-time high, and we're bullish. What else? Nothing else. That's it. So typically, when the only reason we can frame a bullish bias is because we're at all-time high, then the market tends to do the opposite, because those are the days where it is extremely bullish. We're opening extremely bullish. We see this large up move before the open. Everybody can see it, right? So everybody's seen this move that the market has made before 9:30. And what does everybody think? Higher prices. We're at all-time high. We had this really, really strong move before the 9:30 open. We're looking for higher prices. Why? Because we're at the all-time high. So typically when that's the case, the market flushes and does the opposite. And you could say the same thing for pretty much any of these other trading days where we had a really strong up move and then it just flushed like this, right? Really strong up move, consolidation. Oh, we're consolidating. We had a really strong up move. We're at the all-time high. It's going to be bullish, right? Nope. Other way. So when everybody can see this, when everybody thinks higher prices, and the only reason for it to actually trade higher is we're at the all-time high, it tends to do the opposite, because it delivered the previous daily high and then boom, aggressively came back inside underneath previous daily high with this large 5-minute fair value gap that never got inversed. It was respected the entire time. If you extend that out in time, you notice how the bodies never even close at the midpoint of that. That's a sign of weakness. And we roll lower from there. So the damage is already done up here. We have already removed the buy side liquidity above previous daily high. We've already delivered previous daily high. The damage is already done there. We know the damage is done because of how violently and aggressively it came back inside the range. So what reason do we have to see the market keep trading higher? Why would it trade back into the area where the damage is done, where the stops are taken? It wouldn't. But if we look below the marketplace, we can see that for one, does the market leave anything in here for the market that's solid, a solid, strong discount array for the market to grab onto? No. And if we look at these lows, it's the same case, right? Does this look like an area where the market will find some kind of support at a discount array? Is there a breaker formation in here? Is there a fair value gap? Is there a strong high probability order block that's so clear and obvious that we can see it? No. And if you look, we also have what? A consolidation, rally up. So we have the formation of a market maker sell model. We have those relative equal lows from Asia and London that also make this low relatively equal. So now a large pool of sell side liquidity being generated below. We have Monday that ran away from the new week opening gap. It completely disregarded it, so it left the new week opening gap inefficient. And if you look at the location of the new week opening gap, where is it at? What price point is it at? 25,000 whole number. Literally, the high of it is at 25,000 whole number. That is the opening price for this weekly range, and we have left the new week opening gap inefficient, and it's a whole number. We have all this generated sell side liquidity. We have this strong up move. We've delivered previous daily high. I'm not really seeing any reasons for the market to actually want to trade higher. It's already done the damage there, so why would we move in that direction? We shouldn't. We should then attack the sell side below. If we look at the 4 hour, is there any discount array for the market to grab onto on the 4 hour? Do you see any formation of a new discount array in the 4 hour in the overnight session? This is the 6 o'clock candle, 6 o'clock p.m. Asia session candle. Does it form any discount array in the overnight session? No. But what do you see? Really, really clean, smooth lows. Okay, now let's go to the hourly. Let's look for the same kind of information. Is there any strong discount array for the market to grab onto? No, not necessarily. Any new strong discount array formed? I'm not really seeing anything. We do have large discount wicks, right? But is there a strong, open, obvious inefficiency? A strong, open, obvious fair value gap? No. And what I'm kind of reading right here is we had this immediate rebalance, and this is kind of like the last push up, last springboard kind of type move to send it into previous daily high, and then we reversed and flushed. So this is just me explaining everything in hindsight, obviously. But this is what I do to get good at bias, because if I miss something, if I miss a move, then you better believe that I'm all over that at the end of the session, figuring out exactly why that move unfolded and why I got it incorrect. So the only thing that I really learned today was all the reasons for the price to go lower and not go higher. And I'm mentioning every single one of them because I don't want to miss a move like this in the future, and I want to get the read correct in the future. I want to be able to be the contrarian and go in here and be like, okay, everybody sees this strength. We've delivered previous daily high. We've done the damage there. It's came back inside the range. There's no reason for it to trade higher. I'm looking for shorts today. Everybody else is going to be looking for longs. And so I was kind of scared to be the contrarian today because I noted the potential for it to go lower, but I had such a good sell on Thursday. That I feel like leaning bearish going into these days while the market's at all-time highs is being influenced by how good of a trade that I had on Thursday. And that's also why I was indecisive on the bias on Friday. So with all the hindsight explanation out of the way, what were the trades that I actually took? What was my actual trade plan? See, I'm noting the smooth sell side and the new week opening gap, right? But the strength in the respective daily discount arrays tells me we are still on the buy side of the curve offering higher prices. Not interested in reaching for that gap. It's running away from it. So this move right here is quite literally manipulating my sentiment and having me think we are extremely bullish and we're going higher, which is what I'm sure probably 80% of you guys also thought going into today. And then market criteria, I explained to you the double purge that I noted in London, divergence in Asia, noted that as well. Huge impulse swing produces strong discount arrays, noted that as well. It's done a lot down there to not need to attack the relative equal lows. The drop down right from Monday's open also supports the idea of protraction in the discount wick of the daily ranges formed. Okay, so all this I already talked about. My actual trade plan was looking for the close on the 1 hour candle to not close as a really, really large down candle because that would indicate reversal, right? I actually wanted it to see it close something like this. Tell me the market's comfortable where it's at, not interested in reversing and going lower. Because most of the time when it does close like this, does not really lead to a reversal. A large down candle here would really, really confirm the reversal and really have me confident in the idea of lower prices, but it didn't do that, which is what I framed the second trade off of when we had this little separation right here. And then we barely dipped down into that. And this is the second trade that I took today. We barely dipped down into that. We punished all the people who bought the market long at 9:30, trying to long this thing after they see this insanely strong move in the pre-market session, which is what I did in trade 1. Now that all the longs here are punished, I'm thinking, okay, they've cleaned the slate. We took the buy stops here. We took the sell stops here. Net, break even, clean the slate. Now what? Now I'm thinking, okay, now they might actually send it higher. Noting how the market dropped into that little separation, that new separation on the hourly, and then boom, came back inside the range, inversion fair value gap, and there is your second trade for the day for me. So I just went ahead and explained the second trade before the first trade. Chart executions, put them on. So there you have it. There's the execution at the inversion fair value gap, and it actually ran higher a little bit, but then showed no discount sensitivity at the change in the state of delivery. If we were bullish, this should have acted as an order block. It didn't. And then we showed no discount sensitivity again at this little fair value gap right here. Now, because I'm doing the work right now to figure out where exactly I'm placing a stop loss if I'm trading an inversion fair value gap, the risk on this trade is 7 handles. So I'm telling you guys, if you put in the extra work to figure out everything, and I mean everything about how you trade, you can only benefit from it. If I pull up my Miro board, you know I got to do it every episode. I'm developing stop management, right? So for inversion fair value gaps, according to my inversion fair value gap stop principle number 3, if there's a small imbalance or second inversion fair value gap, the stop must tolerate a move into it. It's going to stay open and it doesn't have to go at the extreme. So in this case, we had a small little gap below the inversion fair value gap, right? So my stop loss has to go below that. It doesn't have to go here at candle 2 because I know this is going to stay open if the trade idea is valid. Now, looking in hindsight, this is the first time that I'm actually noting this. This inversion fair value gap was extremely small, extremely small. It was probably only like a couple of handles, right? It was literally less than 3 handles. So not the highest probability inversion fair value gap, but I know where a stop loss should go and where the market should not trade to if this is to be a winning trade. And it wasn't, right? So it violated that, ended up violating this because it wasn't a winning trade. There you go. Good stop management. Now, trade 1. This will probably be better explained if I pull up the screen recording. But what I'm simply noting is, and you'll see me literally draw a circle around it. But if I go back to the pre-market plan, the area that I was looking for reversal was the 15-minute suspension block with consequent encroachment of the daily premium wick. So before I went back in and annotated everything in hindsight and found out exactly where I went right and where I went wrong, I was focused on this. I'm just going to remove these because they're noise. I was focused on this as a discount array from the daily time frame to potentially frame a long off of. I was noting how that aligned with the 15-minute suspension block, which is simply volume imbalance here and here. There's a volume balance on either end of the candle. It's a suspension block, new PD array, whatever. So I was noting how the market dropped into that consequent encroachment of the daily premium wick. And what did we have? We had closes above it, right? So now I'm thinking, okay, we could potentially move higher from here. I was also looking for the market to rebalance this range because we were extremely high in a premium. So it did, offered a discount of that. I was noting how at the time, the first 5-minute candle was going to close with a large discount wick based on what it was doing at daily premium wick consequent encroachment and suspension block consequent encroachment. I was like, okay, we're going to form this 5-minute wick after testing the PD array here. I'm bullish. This is in alignment with my plan. This is the area that I'm looking for a potential reversal. It's giving me the perfect respect of consequent encroachment. It's immediately moving off of that. So you can see me literally draw a circle around it. I'm annotating it. And then as soon as this discount wick forms, I want to annotate that as well and get some more information around that to grade the strength and weakness of the market. So initially it crosses, if we're bullish, right, we want to buy down candles because if we're bullish, down candles should be respected. So initially it crossed the open price of this down candle right here, but then it flipped back bearish. So I'm just waiting for a change in the state of delivery. We crossed this open price right here. I'm noticing the market start to move with some speed, some strength. This closes as a solid up candle, and I'm buying the open price there. Stop loss goes at the order block extreme, the low. And then eventually how I felt in that trade, you guys know how I can literally reference everything throughout the entire session. This is a professional process, and I promise you, you will get far if you can replicate this and create your own way of doing things. So at 943, I'm confident holding it. I like how we're sitting up here and it's struggling to break lower, but also struggling to move higher. Kind of a coin flip, but the consolidation tells me we could go higher. They might do some tricky shit and stop out longs before the real move. Kind of what it looks like at this moment. As long as it just sits here and makes lower wicks, I should be good regardless. A win. 3 are at the first partial. That's good. So if we go back to the recording, where is my first partial going to be? Well, according to my trade plan, if we look at my daily objective, I'm aiming for a new high a day and potentially riding out after that if price soars past the all-time high, past the high a day, and just keeps drifting in higher in this all-time high condition. So I was looking for just a large up day because we are at all-time highs. I thought the market would just keep going higher if we did break the high a day and just kept going beyond that. I don't have a target beyond that, right? Because we're at all-time high. So I'm thinking I could just potentially hold this and the market might just keep floating higher one of those kind of days. So initially it looked good. It looked really, really good. But then we start to get met with some resistance in that 5-minute gap that actually rejected the market and never really did anything from there. So there's that losing trade. Now I will note that I had the opportunity to take this trade off for break even but I didn't do so because right here at this point in time, if you were trading this morning session, you were in this market at this moment. What are you thinking right now when the market's leaving this consolidation like this? What are you thinking? Oh, we're bullish. Oh, we're going higher. Oh, we're going to break out of this consolidation range. That's exactly what I was thinking. Look at me moving my take profit up already. I'm thinking, okay, now it's finally working. But look what they did with this. This is malicious intent. This is manipulation right before your eyes. This is them making the market in front of you, manipulating the market in front of you. Shorts who are short off of this high, who are actually bearish in alignment with the daily bias, and may have sold short here in this high. Their stop loss is going to go over here, right? Or they might trail the stop down if they're short up here. What are they doing? Those traders knocked out. What else is this move doing? Everybody sees this. We're at the all-time high. Everybody sees the move that it made pre-market. They see this really, really strong up candle, and they think, oh, we're breaking out of the consolidation range. Buy it. So now you have traders buying the market long on a breakout from this consolidation range. And what do they do with it? We get a close below this candle's high, and they take it the other way. So I'm noting, if the market disrespects this gap, I know with a high degree of probability that they're going to take it to the other side of the range, punish all the longs who bought the breakout. Where would their stop loss go? Below these lows, and then below these lows as well. But you also have traders from the 930 move who bought this move early into the open at 930 on this move right here, like I did. I was positioned very, very well. So if this gap fails, my stop is in jeopardy because they're not just going to take it below this low and then reverse and go higher. No, this looks like malicious intent, and they're going to stop out these traders and these traders. And I know this, but this gap gets inversed, and I hold on to the position. Purely out of hope, and the risk was pretty minimal. It's only $81. So I'm just going to let the trade do its thing. But in reality, I had the opportunity to take a partial here. If the trade is a coin flip and I'm not extremely confident it's going to play out, why am I not running down an equity? Why am I not taking off as the market has made a high and then made a higher high than that? That's an opportunity for a partial. And because I didn't partial there, what happens? Well, I realized the full risk on the position, which I'm not upset about at all. It was $81. Stop placement is top tier because I've done the work to study where should my stop go. But eventually they come back and they stop at those 930 traders. And then that leads to trade 2, and I'm trying it again. I'm confidently trying it again. Notice how I'm able to go in there again with confidence. I'm just following my plan, and I am playing my hand when I see something that's in alignment with my plan. So the trades that I took today, they weren't terrible. They were directly in alignment with my plan. Risk was extremely well managed. They just didn't play out. Why? Because I was trading in the wrong direction. We went lower today, not higher. So the main lesson from today is, why did the market go lower? And I explained that to you guys. And that's it. Other than that, I don't really see anything wrong that I did at all. Again, what do? We show up tomorrow and we do the same damn thing and get a different outcome. And that's how it goes. So I hate to be down or emotional in these videos. I mean, I don't want to like rub off on you guys or make you feel for me in any kind of way. Like, fuck that. But I'm still going to show up and do the things that I know I need to do on a daily basis, and I will be consistent. And regardless of what happens externally, I will see the success that I have sacrificed everything for now, eventually. It has to come. So, that being said, that's the end of this video. I'll talk to you guys tomorrow.